Hello to all. Markets reward discipline and punish uncertainty. We are here with these objectives to identify the prevailing regime, measure risk, and protect capital when uncertainty rises. Our objective is not to predict every market move. In today's Bitcoin Intelligence briefing for June 8, 2026, we examine Bitcoin through four different layers. First, we identify the market's current regime using the Bitcoin Regime Overlay. Second, we examine the underlying evidence through Bitcoin Intelligence Matrix. And finally, we translate those signals into a unified market interpretation using Bitcoin Market DNA. And finally, we convert intelligence into actionable scenarios through the trading playbook. So let's begin with the regime. But before beginning, the information presented in this video is provided solely for education, research, and informational purpose. It reflects market observations, analytical interpretations, and also academic perspectives based on publicly available information at the time of publications. Nothing in this content should be interpreted as financial advice, investment advice, trading advice, legal advice, or a recommendation to buy, sell, or hold any financial assets, including Bitcoin or other digital assets. Please don't forget, financial markets involve substantial risk and past performance does not guarantee future results. Cryptocurrency markets are particularly volatile and may experience significant price fluctuations that could result in partial or complete loss of capital. So, we begin with the Bitcoin regime overlays, which provide high-level view of Bitcoin current market state. As of June 8, 2026, momentum remained weak while volatility continues to expand, and the market is currently operating within what we classify as a compression failure regimes. And in our framework, markets typically transitions through four broad phases: breakdown, liquidation, compression, and decision. Following the recent liquidation phase, Bitcoin has entered a compression environment where market participants are attempting to establish a new equilibrium. However, the compression structures is not yet produced a confirmed recovery. At the next stage, volatility remains elevated, directional convictions remains limited, and the market continues to search for sustainable paths forward. This is not yet a trend confirmation regime, it remains a transition regime where risk management is more important than aggressive positioning. With that broader context established, let's move deeper into underlying markets evidence we together. The Bitcoin Intelligence Matrix represents the evidence layers in our framework. Rather than focusing exclusively on price actions, in fact, we evaluate multiple dimensions of the market behavior, including trends, strengths, liquidity conditions, investor sentiment, volatility stress, ETF demand, stablecoin liquidity, derivatives positioning, institutional participation, network activity, and broader macro environment. As of June 8, 2026, the intelligence score stands at 47 out of 100, indicating that Bitcoin remains in a defensive market environment despite recent recovery attempts. Also, several indicators continue to reflect elevated market stress. Trend strength and liquidity conditions remain weak, while market fear and volatility stress have risen significantly. ETF demand remains subdued and institutional participation has slowed and derivative risk remains elevated. The dominant driver currently remains panic liquidations and reflecting the impact of aggressive deleveraging and risk reduction across market participants. In fact, the primary risk remains volatility shock, where continued uncertainty may lead to abrupt price movements, and increased market instability. Generally taken together, these signals suggest that the market remains fragile. While short-term recovery attempts remain possible, current conditions continue to favor capital preservation over aggressive risk taking. At the next stage, we want to analyze with together the Bitcoin market DNA. In fact, after evaluating the underlying signals, we move to the Bitcoin market DNA framework. This framework consolidates multiple market variables into single regime interpretations that designs to capture the market's current behavioral states. The current market DNA scores stand at 47 out of 100, that placing Bitcoin within what we classified as a risk of recovery attempt regime. In fact, in this condition, momentum remains weak and liquidity conditions remain constrained. Trend structure has yet to demonstrate a sustained recovery. At the same time, fear and volatility remains elevated, creating an environment where sharp counter-trend rallies can occur but may struggle to develop into durable uptrends. And the market pressure score currently stands at 84 out of 100, indicating that downside pressures continue to dominate overall market behavior, and the dominant driver behind the current setup is oversold conditions. Following an extended period of selling pressures, the market has entered a deeply oversold condition where recovery attempts may emerge, but confirmations remain limited. However, the primary risk remains continuation selling, and until liquidity improves and trend strength stabilizes, recovery attempts should be approached cautiously. From an institutional perspective, this remains a capital preservation regime rather than aggressive risk-taking regime. In the next steps, we try to analyze with together our customized trading playbook. In fact, the trading playbooks translate intelligence into actionable scenarios. For bullish participants, the market must first reclaim the 64,000 of $65,000 resistance, and only then do we consider recovery scenario with potential upside objectives near $68,000 and $72,000. A sustained move below $60,000 would invalidate the bullish thesis, and for bearish participants also, rejection beneath the $64,000 to $65,000 and would favor downside continuations. And under this scenario, the primary downside objectives remain $60,000 and $56,000. A move above $500,000 would invalidate the bearish thesis. And our current regime confidence stands at 82%, reflecting the strong agreement among indicators that the market remains in the defensive risk-off environment. Market ROIs also remains high, and meaning traders should expect elevated volatility, sharp reversals, and a higher probability of false breakdowns and false breakouts. The preferred time horizon for this framework also is 1 to 3 weeks, and focusing on tactical positioning rather than long-term forecasting. And the objectives is not predictions, don't forget. The objectives is disciplined decision making under uncertainty here, and identify high probability scenarios, manage risk effectively, and preserve capital while uncertainty remains elevated. As always, let the market confirm the thesis before committing capital. Protect capital first. Don't forget, please protect your capital first and let opportunity come second. Finally, please don't forget, markets change, regimes change, capital is finite. So please protect capital first and let opportunities come second. This is Amin, and here is Beta G Dynamics. Thank you so much for your attention.